Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn about what is a daily liquidity and what are benefit to use daily liquidity. So in this chapter, you will learn all about daily candlestick based liquidity, how we can spot them and how we can trade them and what are benefit to use of this type of liquidity. And first of all, you have to understand, you have to identify daily time frame structure, and it's not about structure mapping which is include inducement. So I'm talking about only candlestick form of the structure, which is the market push higher and lower in terms of the daily candlestick. So this one is our daily candlestick chart, and this is not a 15-minute 1 hour chart. This is our daily candle chart. I'm going to teach you in a bullish market, in a bearish market, and how we can identify them and how you can actually trade. So first of all, you have to understand why daily liquidity create here. When market momentum is a bullish and everyone looking for the buy, when market break the previous day high as a breakout, if same day market break the previous candle low, which is a previous day low, then people are looking for the sell. And same thing will be applicable in a bearish market. If market is a bearish, then everyone looking for the sell when market break the previous day low, and people are looking for the buy when market break the previous day high. And these type of thing will be continue as per the daily candlestick, and you don't need to trade only based on the previous day candle high and low. These are just additional confirmation for the buy and sell, and you can get a perspective that what is going on today, and you can trade confidently in a lower time frame as per our entry plan. Now I'm going to show you exactly that how you can identify the liquidity and how you can trade in a lower time frame. So first of all, look at this chart. This is our bullish structure, as we know, because market momentum is a bullish and you don't need to focus on the major structure. This is our candlestick structure. So when market momentum is a bullish and break the previous high, which one is here? If market break the previous high and sweep the previous high, or just break this previous high or close above this high, doesn't matter. If market give any lower time frame confirmation for the sell, so those can be a short term sell. Why? Because market momentum is a bullish, but if you are looking for the buy, means market momentum is a bullish and break the previous low, which one is here, right? So once market break the previous low, which one is here, so we can buy here for the longer term because we are buying as per the trend and as per the direction. Again, same thing, you can see here, break the previous high. If market break the previous high and give any direction in a lower time frame for the sell, looking for the reversal, so you can short term sell here. Why? Because momentum is a bullish. If market break the previous day low, you can definitely buy for the longer term, but you need additional confirmation in a 15-minute chalk and flip anti-module before the buy or sell, so which will be covered after that. And sometime you will see market break the previous day high, but market gives a strong move to the downside like this. So this is our daily candlestick, but in a lower time frame you will see very large move to the downside. So these things will be phenomena, sometime very larger move, sometime you will see short term move. But you have to remember only one thing: if market momentum is a bullish and market break the previous high, right? So if market break the previous high, market will give you short term move, at least push downside. Okay, so you have to sell here for the short term. But if market break the previous low, which one is here, after taking out the previous low, you can buy for the longer term in a lower time frame chalk confirmation, at least 15-minute chalk, because you are following daily candle time frame. So first of all, mark this low is here, right? So what is this? This one is our high probability buy here, and this one is called HP. And where is our low probability? When market break the previous high, which one is here, right? So when market break the previous high, and this one is called low probability setup. Why? Because market momentum is a bullish, but you have to wait for lower time frame confirmation before the sell. If there is no additional confirmation for the sell, then you can continue buy in a lower time frame. And same thing will be applicable here. When market break the previous low, which one is here, once market break the previous low is here, then you can sell here for short term. In this case, you can see market push downside, right? But you have to sell here for short term because you don't know exactly where is market going on. You have to take a decision as per the previous day candle high or low, and you have to set stop loss and target as per the previous candle high or low. If you are buying here at this point in high probability setup, you can set our previous measure high low as a target. When you are buying and selling on the low probability setup, then you have to set our target first recent high or low in terms of the 15-minute structure, or you can also set your target based on the previous day of 50% of the candlestick as a target. So same thing happen here in the next move is here. Okay, and this low is broken by this H candle here. Okay, so this become our high probability setup is here, even candle close below it. Okay, but we are looking here for buy when market gives you any lower time frame structure shift, like a lower time frame change of character, then definitely you can buy here. So which lower time frame you should follow here? You should follow only 15-minute time frame as a change of character for the additional confirmation for the buy and sell, right? And the next move, what happened here? Again, market break the previous high, and this one is called low probability setup, and these are all low probability setup for the sell. Okay, but in a lower time frame you will see a continuation in a 15-minute and H1 time frame. I'm just showing you exactly that how you can identify, measure high or low, and how you can trade in a lower time frame. After learn the previous day high or low, you will get a perspective what is happening today and how you can react in a lower time frame. And after that, what happened here? This candle again broken by this one, right? And these all low probability setup for the sell because momentum is a bullish. And when market taken out the previous day low, then market gives you strong momentum to the upside. Those called high probability setup here for the buy at this point, because a candle low taken out by the N candle low, right? So this become our high probability setup when market taken out the A candle high by the N candle. So this become our low probability setup at this point, correct? So this is overall process to identify where is our previous day candle high and low, and this one is called daily liquidity, or you can say daily range liquidity. There are different names, whatever you called, but you have to understand that where is our previous day high and where is our previous day low, and how you can trade, and what happen if market taken out the low, what happen if market taken out the high. Simply, if market is a bullish, right, if market momentum is a bullish and market break the previous high, this one is called low probability setup. But when market break the previous day low, which one is here, right, and looking for buy here in a lower time frame, so this one is called high probability setup. And you have to set our target is here as per the previous day high or low. When you switch in a lower time frame, then you will get a very huge risk reward at this point as a day trader. Okay, and these things will be continue like this. Okay, and what will be happen when you switch into bearish market momentum? So this one is our bearish diagram. As you can see here, in a bearish diagram you have to wait for taking out the previous day candle high, which is our high probability setup, and when market break the previous day low, which is our low probability setup, because market momentum is a bearish. So let me show you exactly. Look at this one. This one, our previous day low is here, and M candle break the previous day low, and this one is our low probability buy here and low probability sell here. Why? Because market break the previous day low, and if there is no additional confirmation, and then you don't need to buy or sell here. In this case, I'm just talking about based on the previous day high or low. You can say a daily candle liquidity. So I'm not talking about buy or sell in a lower time frame. So it's all about based on the previous day high or low. But when you switch into lower time frame as per 15-minute, 5-minute, and if looks any good setup for the buy or sell, then definitely you can take trade. But I'm just talking about to show you exactly that how you can identify previous day high or low as a liquidity, and how you can actually trade in a lower time frame. Then what happened after this one? M candle high taken out by the R candle high, which one is here, right? It means this become our high probability sell setup here. Momentum is a bearish, right, like this, and taken out this high, and this one is called our high probability sell setup is here, right? So what happened after this one? Market again push downside and break this R candle low is here. So this become our low probability setup here for the buy, because momentum is a bearish. But market gives any indication here for the sell, then definitely you can sell, which is our high probability sell setup, because momentum is a bearish. But majority of the move you will see when market break the previous day high, which one is here, like this K candle high taken out by the H candle high. So this one is actually called our high probability sell setup like this. you will see a very larger move after taking out the previous day high, and same thing applicable in a bullish market. If market taken out the previous day low, then market will give you strong momentum to the upside. So these things will be continue, and bottom of the structure, same thing happen here. A candle high taken out by the N candle high, right? So this thing will be continue something like this. Taken out the previous day high is here, and you have to switch into 15-minute and then sell. Target is here, previous day low, which one is here, you can say target is here. Now I'm going to show you exactly on chart, then you can understand very easily and very quickly. So in this case, as you can see here, market momentum bullish and bearish, and these things will be continue. I'm talking about the based on the candlestick form of the structure, not about the actual structure which is taken out the inducement. And now you can see here in this case what happened here. Market momentum is completely bearish. As you know, when market momentum bearish and taken out the previous day high, which is called high probability sell setup. So first of all, you can see here where is our previous day high, which one is taken out, this one, right? So when market taken out the previous day high, this one is called our high probability sell setup. Right now let me change the color first. So this one is our high probability sell setup is here. And what happened if market taken out the low, right? Because market momentum is a bearish. If market taken out the low, this one is called our low probability buy setup, which one is here at this point. In this case, what happened here, market taken out both side liquidity, and you can play in a both side. When you switch in a 15-minute and you will get any additional confirmation for the buy or sell, you can definitely take entry here. If there is no setup in a lower time frame, then you don't need to jump in a trade. Again, what happened here, market taken out this low, right? And when market taken out this low, which is an indication that market actually looking for the reversal, and when market taken out the low, then definitely you can buy here for the short term, because market momentum is still clear, because market momentum is still bearish. And when we decide that market actually looking for the reversal, you have to wait for previous candle high is here and close above it, right? So when price close above it, actually this one is here. So when market close the previous day high, it means market momentum change for bearish to bullish is here. Okay, so what happened here, now you can see here market momentum was completely bearish, and now market shift again bullish is here when market close of it. So you have to wait for to taken out the low to confirm a strong buy side to the upside. And in this case, if market taken out the previous day high, which is our low probability sell setup, but when market taken out the previous day candle low, which is our high probability buy, because momentum shift bullish again here. So let's see what happened next here at this point. At this point, you can see a previous day high is here and taken out by the next move is here. So simply you can definitely sell here for the short term at this point. But this is our low probability setup, because momentum is a bullish, and if market taken out the previous day high, break the previous high, and sometime close and sometime not close, but most of the time what happen, when market break the previous high and gives you any lower time frame confirmation, as we mentioned in a 15-minute, market gives you a change of character, then definitely you can sell for the short term. And when market break the continuation move, something like this, for example is here, break this high, okay. So at this point what happened here, market break the previous high, but market not create any lower time frame confirmation at this point, then you can't sell here and you can't buy here. Okay, so let's see what happened here. Next move, again what happened, this candle high break by the next candle. So simply you can also same thing, break the previous high and sell here as per the 15-minute change of character is here, right? Again same thing happen here, sweep the previous high and definitely you can sell here. So what happened here at this point, this candle low is a break by this one, okay. So it means what happened here, break the previous low, you can looking for the buy, but market not and maybe create and maybe not, okay. So this will be confirmed when you switch into 15-minute structure. Market taken out the previous day low, so you can buy here because market momentum is a bullish. But what happened here, market continue pushing downside and not create any structure something like this, and market not create. So simply you are looking here for buy because market taken out the previous day low is here. Again what happened here, market taken out this low is here, taken out this low, you can definitely buy here for the short term, because market this candle close below it, it means this is our short term move for the bearish side, okay. And then again what happened here, market sweep this low, you can definitely buy here for the short term. When market break the previous high, you are looking for the sell. So what happened here in this case, market taken out the high or low, in a both side is here, and right. So these thing will be continue when market break the previous day high and break the previous day low. So simply you can buy or sell. You have to remember only one rule is here, simple, which is very simple is here. Let me show you exactly. Let me tell you one more time. If market momentum is a bearish, I'm talking about based on the candlestick form, not based on the structure, right? So if market momentum is a bearish and taken out the previous day high, it means when market break the previous high, so this become our high probability setup for the sell at this point, right? Because momentum is a bearish, and when market taken out the previous day high, and this high actually act like a inducement to induce to new traders to buy here, when which is looking for the buy after break the previous day high or low, right? So same thing happen in a bullish market. When market momentum is a bullish, something like this, okay, market taken out the previous day low, which one is here, and definitely you can buy here for the upside, and this become our high probability buy and high probability sell at this point. Now let me show you exactly in a lower time frame, in a 15-minute time frame, then how you can actually trade and buy and sell in a lower time frame, and what criteria you should follow before the buy or sell. So let's see. So now I'm going to show you exactly on chart that how you can identify chalk in a lower time frame and how you can trade in a lower time frame. So this is our bullish market structure, as you can see here. But if market taken out the previous day high, then market give you small momentum to the downside and break the first low as a change of character in a 15-minute, then definitely you can trade. So let's see what happened here. So this one is our previous day high, and which is sweep by the next candle is here, right? So it's not about based on the 15-minute, it's all about previous day candle high, which is already taken out by this move. And then what happened here? You can see here after taking out the previous day high is here. So this is our previous day high, which one is here. And then what happened here? This previous high is taken out by this move, and after taking out the previous day high, you have to wait for change of character. Once market break the first recent high or low, that's called change of character, because this high act like a POI, because market taken out the liquidity. After taking out the liquidity, first pullback is called change of character. So in this case, where is our change of character? As you can see here, where is our first pullback at this point? So this is our actually first pullback. Market break this one after taking out the previous day high, and this one is our previous day high. Let me show you exactly one more time. At this point you can see here, this is our bullish momentum, and as you know, if market momentum is a bullish and market taking out the previous day high, which is our short term sell, not for the longer term, because momentum is a bullish. But if market taking out the low in a bullish market, which is our strong indication for the continuation to the upside. So what happened here? Market taking out this high is here, and after taking out this high, you have to switch into 15-minute to show you exactly that how you can trade here. Now switch back again in a 15-minute time frame, taking out this high. Let me show you through bar play, then you can understand very clearly. So this one is a previous high, and in this case, where is our chalk? This one, okay? So this previous high is not confirmed yet until taken out this low. If market taken out this low, so this is become a valid for the reversal. That means market looking for the reversal. In case if market not break this low and continue push higher high, something like this, so this is not a valid for the sell here, because market continue looking for the buy. In a higher time frame, market momentum is a bullish, so you have to wait for it. So let's see what happened here. Okay, finally market break this low, and after break this low, what criteria you should follow before the buy or sell? Always you have to wait for to taken out the inducement before the sell. If market not create inducement, simply you can also sell based on the structure sweep. So at the current price action, where is our inducement? Inducement means when market break the first pullback is here, right? This is one is our change of character. After this change of character, where is our inducement? Inducement is here, because this one is our first pullback after break of structure, after change of character. So once market taken out this inducement, simply you can sell, and you can sell in a two way. First one is here, if market directly push higher high, okay, and sweep this high, then you can simply sell here, something like this, right? So this one is our first way, and next one is here, and the next one is here. If market taken out the inducement and above it there is any unmitigated order block, simply you can sell there. So right now you can see here above it, this one is our unmitigated order block, which one is here, proper imbalance is here, and this order block taken out the previous day liquidity. So simply you can sell here directly. First entry is here, you can sell as per the 15-minute structure, and this one is here. And remember one thing is here, you can sell for the short term, and this is a not for the longer term, because market momentum is a bullish and you are selling for the short term move, counter trend. And where you can set your target, you can target in a two way. First one is here, if market move something like this and then again go higher high and mitigate this one, right? So you can simply target this low like this. Okay, so this one is our first target. And second target, how you can set it? Second target, you can mark the previous day low and previous day high, which one is here, right? And you can set target between this low to this high and 50% of this candlestick, which one is here. So you can set maximum target is here in a counter trend. But if same thing happen in a bullish market, so you can set the target a maximum low, which one is here. Okay, so let's see what happened next here after this move. Okay, market trying to push higher high, but market not create new. Right now this inducement is still valid because this low is not taken out by this move. So let's see what happened next here after this one. Okay, all right. Okay, so finally what happened here, market mitigate this order block and you can set a first target is here, right? And the next target which was here around this low. Okay, so this one is our next target at this point. And how you can sell here in a lower time frame. Okay, so this one is our based on the 15-minute structure, but if you are looking to sell as per the 1-minute chart, because market tap on your 15-minute POI, so you can simply switch here in a 15-minute structure, wait for chalk, boss or flip entry module. Simply you can sell when market tap on 15-minute POI. So let me show you exactly in a 1-minute chart, then you can understand very easily. So at this point what happened here, you can see here market tap on this 15-minute POI at this point, and you have to wait for the lower time frame confirmation before the buy or sell. So first attempt market tap here, and in this case you can see here where is our pullback. In this case there is no pullback confirmed yet, and the actual low which was here, right? So this one moves something like this and then again go higher high. So you have to wait for to break the previous low, which one is here, but market not break this low and market continue going higher high. And the next attempt what happened here, finally market break this high, and this low is a change of character because this one is our highest point at this point, this one is our highest high, right? And after this one this become our valid change of character because market taken out the liquidity, and after taken out the liquidity what happened here, this one is our change of character. After this change of character, when we can sell in this case, first one is here, you can directly sell here at this point when this candle high, because this one is our highest candle is here and proper imbalance at this time, and you can sell here. Why? Because candle taken out the liquidity. If market not taken out the liquidity, just close above it, so you can't sell here. In that case you have to wait for taking out the inducement before the sell, something like this. Okay, then you can sell like this. Okay, but so this one is our first entry for the sell at this point right now, and they put the stop loss just above it because this candle taken out the liquidity. So this one is our actual strong candle high is here, and they put the target, first target is here, this low is our lowest point is here, and you can target is here, first target is here as per the 1-minute and 15-minute high or low, right? And the major target is here as we have discussed as per the previous day high low between of the move is here, this candle high and this candle low, and this one is our previous day high, right? So major target is here and first target is here, and you can simply take maximum profit on the first profit. You can take maximum profit on a TP1, and this one is our your final TP, which is a 12 bar. So let's see what happened next after this one. Okay, let's see. Okay, so finally what happened here, market mitigate this one, and this one entry is a valid here, and you can sell here, and you can also sell here on the next candle because this candle taken out the previous day high and this candle taken out the previous candle high and close below it as per the single candle mitigation, which will be covered in entry tabs. So I'm just focusing you to exactly show you that how you can trade after taking out the previous day high or low. So this one is our first entry, and let's see what happened next after this one. Okay, all right, so now in this case when we can sell in this case, so first one you can see here market momentum is a bearish and market break this one, and this one is a called change of character, and this one is a called a break of structure. And you have to remember one more thing, this is our general structure and you have to follow general structure when market tap on PY. To identify higher time frame structure, you have to always must be taken out the inducement to confirm lower low and lower high and higher high, right? So this one is our general structure. Market break this low, which one is here, right? And after break this low, where you should sell, you have to identify where is our unmitigated order block. So in this case, where is our unmitigated order block and when we can expect a sell? We can expect this high act like an inducement. If market not create any inducement at this point, then you can also sell here. Why? Because this is our strong supply zone and this candle shadow taken out the previous day high. This candle shadow taken out the previous candle high, right? It means this is our strong zone for the sell and above it everything is mitigated here, right? So this become our valid entry for the sell at this point, and you can put the stop loss just above it for the safer side, but this one is also valid because this one is our actual pullback before this drop. But if market not create any inducement, then you have to put the stop loss just above it. But right now what happened here, market create inducement, which one is here, okay, something like this, right? So if market taken out this inducement, then you can put the stop loss just above it. If market create move something like this, so when we should set our stop loss above it, right? Because this high can be act like an inducement, something like this, and pushed it downside. So let's see what happened next after this one. And where is our target? Our target will be same. First target is here around a 7 hour, and the next target is here, which one is here, almost a 20 hour. Okay, so let's see what happened next after this one. Okay, all right, nice. Okay, so finally market pushing downside, continue, and you have to wait for. All right, so what happening here, let's see. You can simply sell here the next position as per this one. This is our unmitigated order flow, which one is here, and mitigate here, and you can add one more position. There is different position possible here, but let's see. But I'm not adding any other position because this is a not part of the entry scaling and anything. This is just explanation that how you can identify that if market taken out the previous day high, if market taken out the previous day low, and how you can trade in a 15-minute. So let's see what happened next after this one. Continue. All right, okay, so finally market pushing downside and continue, taking out this inducement and pushing downside, sweep this high and push downside. Okay, so finally what happened here, market meet our target, which one is here, and now you can see that how you can actually find the PY in a higher time frame using the previous day candle high and low, because every candle high or low act like a liquidity. If market not break this low and this is not a confirmed change of character, then you don't need to sell here. And now I'm going to show you exactly what happened here in a 15-minute again. So let's see what happened next here after this one. And look at this one, this is an interesting thing. Yeah, and look at this one, and this is a live price action is here right now. You can see here price moving here. So what happened here, look at this one. This one is our previous day high, which one is here, right? It means if market taken out this high and create any change of factor, then you have to sell here. And what happened here at this point, market break this low, which one is here. Okay, so once market break this low, we act like our PY. When market break this low, and this one is a called change of character. After change of character, what criteria you should follow before the sell or buy? As we know, market must be taken out the inducement at least. If market failed the inducement, then you can sell on the extreme PY. So in this case, where is our inducement? First pullback is here, so this is our pullback. And where is our extreme pullback? You can see here, this high is our extreme pullback is here, right? So you can sell in these two PY. You know, only two PY actually work. First one after taking out the inducement, and next one on the extreme. So after this change of character, you can also sell here. Market tap on the extreme PY, which one is here right now. You can see market after mitigate this sharply move and push downside. So why this move happen here? This is not a randomly. It's all about liquidity. Market taking out the liquidity previous day high, and this is a manipulation exactly, and people are looking here for the buy, and they introduce here for buy, and then what happened, market push downside. And this one is a fake move for the buyers, because everyone looking here for buy after break the previous day high, market momentum was bullish and everyone looking here for buy. and after mitigate this one, and you can also apply same thing here as per the 1 minute, and sometime you will see 1 minute entry, sometime you will see not entry, so it doesn't matter, right? Main thing to mitigate your POI, and you can play in a lower time frame. And first target is here. Which one is here? Our first pullback is here. So this one is our first target at this point, and you can set your target at this low. And then where is our maximum target? Maximum target you can set this low, but this is a not high probability because momentum is a bullish and market can be again push higher to mitigate this one. And this is our unmitigated order block right now. Okay, so market can be continue go higher at this point. So it's all about a probability, right? So you have to play on high probability POI. So I'm going to explain you again here. First thing, if market momentum is a bullish here, I'm talking about candlestick form as per the previously candle high or low, you can say in a daily time frame. If market momentum is a bullish and break the previous high, which one here, and this one is here, and this one is here, if close above it or sweep above it, doesn't matter, right? You have to wait for break the first pullback, which one is here, like something like this, break this high, okay, sometime close above it, sometime not close above it. Most of the time when price not close above it, just sweep the liquidity, then you will see in a 15-minute a chalk, and then you can sell here. Okay, if price break this high and not sweep this high, just continue going higher high, then you will see at this time in a 15-minute structure there is a no chalk most of the time. Okay, but it's all about probability game as we know, but you have to check in a 15-minute. That's why I use 15-minute as a higher time frame for the 1-minute entry as a day trader. And same thing will be applicable in a bearish market. If market momentum is a bearish and taken out the previous high, and simply you can sell here in a 15-minute chalk or boss, and you can add multiple position here for sell, and you can set target is here, maximum low is here, because momentum is bearish and you are trading pro trend, right? So you can target is here. If market sweep this high, okay, for example market create here any chalk or boss, any entry, so where is your target? Your target will be 15-minute low, maybe here, okay, and the next target is here, this candle high, I mean previous day high and previous day low is here, 50% of the previous day high or low you can set maximum target, and this is a counter trend sell, right? And same thing happen here. That's why this is our counter trend sell. That's why I not set my maximum target, which is a low. But if market is a bearish, right, so I can set this low as a target, okay, but market is a bullish, that's why I set my target maximum is up between the low and high. I hope you learned that how you can identify previous day high low as a liquidity, and it's not necessary that you will get everyday trades when market break the high or low, but this is a confirmation. Most sometime you will see this type of confirmation because market not create structure in a every day. There are different way to identify POI, identify liquidity, because liquidity is a main thing. If you identify where is your liquidity, it means you are finding where is our high probability POI. So I hope you understand, and you can rewatch this chapter, and this chapter will help you a lot to understanding that how you can identify where is market going on today, and how we can expect and where we can expect where is our next move. Now I'm going to show you one more example. Which one is here? I marked this one, and this one is our previous day high at this point, and this one is called previous day high, PTH. And what happened here? You can see here previous day high broken and close above it. Okay, so once market close above it, it doesn't means that market not collecting the liquidity. You have to wait for breaking the low. Which one is here? And what is this? This one is our valid pullback is here. And after this pullback, what criteria you should follow before the buy or sell? After this change of character, what happened here? This become our change of character, and this one is our valid change of character. And after change of character, you have to wait for taking out the inducement, because we are looking for sell after change of character. We always looking for sell and buy after taking out the inducement. So where is our inducement? And maybe you are thinking about it, and this is an inducement, but in the reality this is a not inducement. Why? Because this one is not a valid pullback. As we know, market push downside, okay, and create new high and then finally break this. Okay, once market break this low and create new inducement, where is our new inducement? This. So this become our new inducement because this one is our pullback, break this low, and now you can sell after taking out this inducement. Previous day high taken out, break this low, and this one is our change of character. After taking out the inducement, you can definitely sell here. So when we can sell here, we can sell on this candlestick, which one is here, and this become our valid POI, right? So simply you can sell here and put the stop loss just above it, which is a maximum high, which one is here, something like this, right? And put the stop loss just above it. And if you are putting the stop loss based on the order block, as we know, and this is a little bit risky, and maybe you will get a big risk reward, but main thing to protect your stop loss, which one is here, right? And where is our target? As we know, market momentum is a bullish and market giving you short-term move to the downside. So simply you can set target is here because this one is our first pullback at this time. Where is our next target? So this one is a high and low, and you have to identify where is our range between this low and this high, right? So simply you can trade something like this. Okay, so this one is our 50%, and you can set maximum target is here because market momentum is a bullish, right? So this one is our PY is here, and simply you can sell here. Also you can switch in a 1 minute chart. You can definitely sell here as per the 1 minute chalk or boss or flip entry module, which I did here like this. Okay, so you can apply in your chart. All right, so I hope you learn that how you can identify liquidity based on the bullish structure, based on the bearish structure. You have to just follow and you have to practice. You have to stick on your plan that how you can actually find the liquidity. Previous day candle high low act like a liquidity. You have to wait for chalk, 15-minute chalk, and chalk means first recent high low. Market break the first recent higher low, which is a called change of character. Wait for taking out the inducement, tap on POI, then you can sell. Once market mitigate your POI, you can switch into 1 minute chart, then you can again sell here, something like this. Right, so this is our high probability entry, and always remember in your mind it's all about probability, and don't think every time you will get a setup and every time you will get a chalk or boss and entry. No, because it's all about probability game. You have to find where is our high probability PI and play as per your entry plan after chalk, boss and liquidity. Okay, so I hope you learn a lot of things and you can repeat it in a multiple times and do some back testing on your chart. I hope you enjoyed this episode, and I will see you on the next chapter. Happy trading.